The world has always evolved. There was a time when land alone symbolized power. Then came gold, which remained one of the most trusted stores of wealth for centuries. After that, the US dollar dominated the global economy. Every nation and every central bank viewed the dollar as the safest financial asset. But times are changing. Countries like China, Russia, and India are gradually reducing their dependence on the dollar and increasing their focus on gold.
People's Bank of China bought the most gold in more than a year. As prices come under pressure amid the Iran war, China's buying demonstrates that a key pillar of support for the precious metal that remains intact.
Gold is limited, stable, and not controlled by any single nation. That is why gold is trading near historic highs today and is once again emerging as a powerful store of value. But history also teaches us something important. Whenever one asset approaches its peak, another rare asset quietly begins building its place in the future. Natural diamonds are formed over billions of years, and their supply is genuinely limited. The difference now is that new diamond discoveries are becoming increasingly rare, while many existing mines are slowly approaching the end of their productive life. Around 2026, the industry is witnessing a major transition. Several mines are either reducing production or moving toward phase-out. For example, Diavik Diamond Mine, one of the world's most significant diamond mines, has entered its closure phase following the completion of final production in 2026.
We've been communicating it for quite some time with this planned closure, and that's made a big difference in terms of kind of the morale, and we still have a lot of work to do, but the long and short of it is that it's certainly an emotional time as our colleagues go on to their next adventures.
At the same time, major global companies such as De Beers are aligning production with market demand, preventing uncontrolled oversupply from entering the market. The direct implication is clear. The availability of natural diamonds is gradually tightening. At the same time, another major shift has emerged in the market: lab-grown diamonds. They are cheaper, easier to manufacture, and their supply is practically unlimited. Ironically, this is making natural diamonds even more special. Just as there is a clear difference between an original painting and a replica, consumers are beginning to understand the distinction between natural and lab-grown diamonds. This is one of the main reasons why high-end buyers and the luxury segment continue to prefer natural diamonds. Major public figures and luxury brands are also reinforcing this trend, while global icons like Rihanna continue to position diamond jewelry as a symbol of luxury and status. Meanwhile, prestigious brands such as Tiffany Co. and Cartier are placing stronger emphasis on the traceability and authenticity of natural diamonds, further strengthening their long-term value. Today's buyer is not simply purchasing a stone, they are purchasing a story. People want to know where a diamond came from, how it was mined, and whether it was ethically sourced. Diamonds originating from countries such as Botswana, Namibia, and Canada are increasingly commanding premium value because they carry trust, transparency, and traceability. If you would like to better understand this trust and transparency, you can click on the link above and watch our video on Diamond Tracker. The real question is no longer whether natural diamonds will replace gold. The more important question is whether they can emerge as a strong alternative store of value in the years ahead. Slowly but steadily, the answer appears to be yes. Gold remains a stable asset, but natural diamonds possess a combination of rarity, uniqueness, and emotional value that makes them fundamentally different. Every natural diamond is unique, and that uniqueness is what separates it from gold. Over the next 4 to 5 years, as the world faces inflation, currency instability, and economic uncertainty, investors and consumers alike may begin looking not only for safe assets but also for rare ones.
The International Monetary Fund has downgraded its forecasts for global growth. The financial institution is warning that the war with Iran is pushing growth lower compared to 2025, and it's predicting a rise in global inflation.
During that transition, natural diamonds, especially high-quality traceable stones, could establish a significantly stronger position in the global luxury and wealth market. In this changing world, one thing is becoming increasingly clear: gold remains powerful, But natural diamonds are quietly emerging as an asset that is steadily building long-term value. They are not just jewelry. They represent rarity, legacy, and a potential store of value for the future.